Bom dia a todos. Vamos
Good morning,
iniciar a
everyone.
videoconferência da
Let's
Lojas Renner
begin
S.A.
the Lojas
Estão
Renner
presentes aqui
S.A.
comigo
video
Fábio
conference call.
Fátio,
With
CEO,
me today
e o
are Fabio
Daniel
Faccio,
Santos,
our
CFO.
CEO, and Daniel Santos,
Antes de passar a
CFO.
palavra a eles,
Before giving
gostaria
them
de
the
fazer
floor,
alguns
I'd like
avisos.
to make some
Esta
announcements.
videoconferência
This
está
video
sendo
conference call is
gravada
being
e
recorded
traduzida
and
simultaneamente
translated
para o inglês.
simultaneously into
A
English.
apresentação será
We
projetada em
will show
português
here
e
the
para quem nos
presentation in
acompanha em inglês,
Portuguese, so
ela
for
foi
those following the
disponibilizada
call in
aqui no
English,
chat
the
e no
English
site do
version can be
RI.
downloaded from the
Perguntas de
chat and from
jornalistas devem
our
ser
IR
direcionadas à
website.
nossa assessoria de
Questions from
imprensa
journalists
no
can be
telefone
directed
11
to our press office
3165
through the number 11
9586.
31
Antes de
65
continuar,
95
esclareço que
86.
eventuais declarações
Before proceeding, let me
relativas às
mention that
perspectivas de
forward-looking
negócios,
statements relative to the
projeções e
company's
metas operacionais
business
e
perspectives,
financeiras são
projections,
crenças
and
e
operating and
premissas,
financial
com
goals
base em
are based on
informações
beliefs and
atualmente
assumptions
disponíveis,
and on
e não
information
são
currently
garantias de
available.
desempenho,
They are not a
pois
guarantee of
dependem de
performance, as they
circunstâncias que
depend
podem ou
on
não ocorrer.
circumstances that may
No
or may not
Q&A,
occur.
as perguntas
During the
poderão ser
Q&A,
realizadas por
questions may
áudio.
be asked live.
Com isso, passo a
I now
palavra
turn
ao
the
Fábio.
floor to Fabio.
Bom dia a todos.
Very
Muito obrigado
well.
pela
Thank you all.
presença e o tempo de vocês.
Thank you for coming. Thank you
O
for your
nosso
time.
quarto trimestre
Our
confirma que o
Q4
nosso modelo gera
confirms that
rentabilidade.
our model
Os
generates
nossos ganhos de margem
profitability.
bruta, eles são fruto da nossa
Gross
evolução
margin gains are
operacional
the
e dos
result of our
investimentos que fizemos.
operational evolution and the investments we
Chegamos
made.
próximos aos patamares que nós tínhamos na
We are
pré-pandemia,
now close to
com uma margem
pre-pandemic
que ela é
levels, and
sustentável
the
e
margin
ainda
is
com oportunidade de
sustainable,
crescimento.
also with opportunity for
O
growth.
crescimento das despesas foi metade do
Expense
crescimento das
growth
vendas.
was half
Mesmo a
that of
gente tendo
sales
início de
growth.
trimestre um pouco mais
Even
desafiador,
having a
com
start of
temperaturas
quarter that
mais
was
amenas,
slightly
o
more
desempenho da
challenging
Black Friday
with
e do Natal
milder
foram muito
temperatures,
bons.
the performance of
E
Black
também
Friday
com
and
menor
Christmas
nível
were very
promocional do que a
good, and
gente teve
also
no ano
with a
anterior.
lower promotional activity
A
than the previous
eficiência do
year.
nosso modelo
The
sinalizou
efficiency of
também
our
outra
model
oportunidade,
signaled
a de
another
melhorarmos a
opportunity,
nossa
that
performance
of
das vendas
improving
nos
sales
momentos de
performance
transição.
during times of transition.
Também avançamos na estruturação do nosso plano
We
de redução de
also made
despesas.
progress in
E
structuring
essa é uma
our
oportunidade
expense
essencial
reduction
para a
plan,
gente
and
preparar a nossa
this is
companhia
an
para o período de
essential opportunity
2026 a
to prepare our
2030.
company for the
Mas
2026-2030
o que caracterizou
period.
também o ano de 2025?
So, what characterized
A
the
nossa
year of
performance de vendas
2025?
em 2025
Our
no ano
sales
foi em
performance
linha
in
com as nossas
2025 in the full
expectativas.
year was
Nós
in line
crescemos o
with our
dobro do nosso
expectations.
setor,
We
do nosso
grew
mercado, pela
twice as
pesquisa
fast as
mensal
the
do
market,
comércio.
according to
O
the
nosso
Trade
crescimento
Monthly
total
Survey.
foi maior do que qualquer par comparável.
We had the
E nós
highest growth
confirmamos
among
também as
our peers, our
expectativas que a gente
comparable
tinha lá no
peers,
começo do
and
ano,
we
né? Como é
confirmed
que ia
the
se desenvolver
expectations
o
we
ano,
had
né?
at the
Não
beginning of the year
trimestres
regarding
iguais,
how
mas
the year
primeiro
would
semestre que ele
unfold.
foi mais
We
forte.
wouldn't have equal
Nós
quarters,
crescemos
but the first half
15,6% no
would be
primeiro
stronger.
semestre
We grew
e segundo
15.6% in the
semestre
first
com
half,
crescimento
and the
menor.
second half with lower
2025
growth.
também confirmou a
2025
eficiência do
also
nosso modelo
confirmed
em
the
margens
efficiency
crescentes. E
of our
essas
model
margens
in
crescentes
growing
são
margins.
resultado da
These
nossa gestão
growing
de
margins are
estoques,
the
com
result
estoques não
of
só
our inventory
menores, mas
management,
principalmente
not
mais
only with
novos.
smaller
Ao
inventories, but
mesmo tempo,
mainly
nós
newer
tivemos também
inventories.
ganho de
At the same time,
produtividade com diluição de
we posted
despesas.
productivity gains with
Na
dilution of
Realize,
expenses.
nós tivemos também um ano de bons
At
resultados,
Realize, we also had a
ainda
year
atuando de
of
forma
good
muito
results,
prudente em relação
still
à concessão
acting
de crédito em
prudently
função do
regarding
ambiente de risco
credit
que
granting.
nós
Well,
vemos
given the
no cenário
risky
aqui.
environment
A
that we
Yukon
see,
também apresentou
Ucom
mais um ano de
also
forte
posted
crescimento
another year of
e a
strong
Camicado
growth,
teve também um
and
excelente
Kamikado
crescimento de margens
had
brutas.
excellent margin
Nós
growth.
elevamos o nosso ROIC,
We increased our
entregamos uma
ROIC
robusta geração
and
de
delivered
caixa.
robust
O
cash
nosso lucro
generation.
líquido foi recorde tanto no
We
trimestre
posted
quanto no ano,
record net income both
com
in the quarter
retorno
and in
de
the full year,
1,8
with a
bilhão aos
return of
nossos
1.8
acionistas,
billion
seja sobre
BRLs
juros
to
sobre
our
capital
shareholders
próprio
in
ou
terms
recompra
of
de ações,
interest on capital or share
aumento
buyback.
de 27% no
And
lucro
we
por
had a
ação
27% increase
e que
in
nós
earnings
encerramos
per share.
2025
We ended
motivados com o
2025
progresso que nós alcançamos
motivated
na
by the
companhia.
progress achieved
Eu
by
quero
the
trazer também
company.
alguns
I would
exemplos
also
de
like to
ações
give
que
you
tivemos ao
some
longo do ano.
examples of
Quando a
actions
gente
we
olha
took over
para a nossa marca
2025.
Renner,
when we look at our Renner brand and talking about fashion execution, we wanted to leave a universe of just fashion retail to become more of a fashion brand with leadership and authority in fashion. Within the Dare to Be You positioning, we strengthened our collabs and licensing strategies, aiming to expand our perception as fashion experts and to reinforce sustainability and a Brazilian identity. We built a network of relationships with ambassadors, creators, and influencers who reinforce brand awareness, principality, and leadership. And we evolved our artificial intelligence tools for further personalization and greater assertiveness. As a result, the Renner brand grew by 25 percentage points in brand recognition as a brand that knows, understands, and creates fashion. Brand relevance remains unchanged, very high, top of change in its category, fashion, and Brazil's most beloved fashion brand. Renner is also the brand with the highest engagement on social media. Now talking about expansion, we began accelerating store openings in 2025. In 2024, we already had more stores. We opened 23 stores. In 2025, we opened 34 stores. And in 2024, we closed more stores. So net opening in 2024 was 13. In 2025, net opening 31 stores. We accelerated expansion and remodeling of stores, also because those renovated stores provide improved customer experience and boost sales. And we had omni growth. It happened in brick-and-mortar stores and in the digital channel. In digital, we continued to gain scale and efficiency. We adopted new initiatives which personalize the offer and contribute to an increase in conversion rate. Let me give you some examples of digital advances. Just this quarter, Q4, we launched the virtual fitting room, where customers can try on different pieces of clothing in a virtual, dynamic, and very realistic way. While this is not yet available for all items, we see a 2.6% increase in conversion, and this should continue to evolve when we start offering this to more elaborate items and to more pieces of clothing. Another important example, we are expanding the use of AI in the creation of content, mainly for the kids category. This has led to a 60% increase in views for this category. Another example is the Omni shopping bag, where shoppers can purchase online and offline at the same time. So they're at a store, they can buy, they can order something else to be delivered to their home, and this improves the culture and conversion rate. In brick-and-mortar stores, we have a much more adequate and assertive mix. We have more personalized fulfillment for every group of stores, for every group of customers. We have an increasingly fluid online and offline integration, and as a consequence of that, in addition to omni and off growth, we have continuous increase in NPS and expansion of the customer base. We will continue to advance in omni-channel productivity and consistently scale value. Now, when we do all that, we increase our productivity gains. We further expanded our leadership in performance per square meter. Sales per square meter reached 17,000 BRL per square meter in the year. We continue to have the highest productivity in the sector, increasing the difference in the gap to our peers. On average, we are 45% above our direct competitors. We had the highest sales growth among comparable peers, but we have an opportunity to grow and sell even more. The operating model allowed us to see two opportunities to boost our results: executing cost reduction strategies and optimizing sales opportunities, mainly during seasonal transitions. replacing marked down items with new products on a larger scale than we have historically done. This path, like all model evolution, is gradual and continuous. But it is important also to understand what 2025 meant for our 2026-2030 strategy, which we announced in our last Investor Day at the end of the year. Although 2025 is not part of the guidance horizon, 2026 to 2030, well, the year evolved in the same direction as the guidance in terms of sales growth, dilution of expenses, increased profitability and ROIC, and even with store expansion, which was 34 stores in 2025. For 2026, we are aiming to 50 to 60 stores in total. So 2025 has already shown that the plan that we announced is feasible and tangible. I'll now hand over to Daniel, who's going to give us more data on the quarter and full year 2025. Thank you, Fabio. Good morning. To speak about growth, in Q4, we achieved 4.3% retail growth and 5.1% in apparel. This represents competitive sales growth, even with lower than usual temperatures in the first half of the quarter, which resulted in lower store foot traffic and economic factors that pressured consumers' purchasing power. This performance reflected the positive reception of the high summer collection, particularly in the athleisure and beachwear categories, and the improvement in the in-season reaction cycles and assortment allocation processes. In the full year 2025, we grew 9.2% in retail revenue and 10.4% in apparel. The breakdown of our now 9.2% revenue growth already reflects the key growth pillars that support our long-term growth ambition. They are prices in line with market inflation, positive impact of mix due to better inventory mix, superior growth of the digital channel and e-com, and store expansion plan for Renner as well as for e-com. In 2025, we opened 34 stores, including 14 Renner stores, 17 e-com stores, and 3 Camicado stores, resulting in a 1.8% expansion in floor space. Not all of this expansion in area converted into sales in 2025, given that most of the openings occurred near the end of the year. We saw an increase in our customer base and in-store traffic and app and website traffic, which increased sales volume. We found that while our shoppers purchased fewer items per transaction, on the other hand, they made more purchases and spent more on average. On our digital channel, GMV grew by 10%, reaching a 14% share of total sales. This performance was driven by important innovations that enhanced the customer experience and channel efficiency. As a result, retail revenue per square meter, one of the company's main drivers of growth and omni-channel productivity, increased by more than 7% during the year, reaching 17,000 per square meter, the highest among comparable peers. As for the gross margin, we ended Q4 with a retail gross margin of 56.5%, up 0.7 percentage points over fourth quarter 2024. Gross margin for apparel was 57.9%, increasing 0.8 percentage points. For the full year, gross margin grew 0.7 percentage point to 56.1%, close to our historical record for gross margin. This performance was made possible by the greater share of new items in sales and the evolution of the supply model, which resulted in a healthy level of markdowns. The evolution in the mix added to price adjustments in line with inflation also contributed to an improvement in margins in 2025. e-com reported a 0.9 percentage point reduction in gross margin in the quarter as a result of mix adjustments to renew inventories. These adjustments have already been made, and e-com will continue on its growth trajectory. For the full year, gross margin remained stable at around 6%. Camicado reported a 1.2 percentage point increase in gross margin compared to the previous year, reflecting adequate commercial management and a greater share of private label items, home and style. For the year, Camicado's gross margin was 56.5%, up 1.7 percentage point over the previous year. The company ended 2025 with a renewed inventory position and with fewer markdowns, which allowed us to start the year with renewed products in our stores, in our app, and in our brick-and-mortar stores. As for expenses, in the quarter, operating expenses grew by 2%, the lowest growth of the year. Even excluding PPR expenses, PPR being profit-sharing program, our operating expenses grew 3.3%. As a result, we saw a dilution of expenses in relation to retail net revenue of 0.7 percentage points year-on-year. Sales expenses grew by around 3% in the quarter compared to the previous year, resulting in a 0.4 percentage point reduction in their share of retailer revenue. General and administrative expenses grew 4% in Q4, in line with inflation for the period. The increase in spending on third-party services was offset by substantial reductions in shipping costs. In the full year, operating expenses grew 8%, resulting in dilution of expenses in relation to retail net revenue of 0.4 percentage points, reflecting our commitment to deliver consistent operational leverage in 2025. In 2025, expenses linked to the profit-sharing program, or PPR, which covers approximately 23,000 employees, excluding statutory officers, grew 16% and accounted for 12% of net income, down 0.6 percentage points versus 2024. The total amount provisioned for 2025 was calculated based on the average achievement of 103% of corporate, individual, and strategic targets. Each business unit has specific triggers and targets. Moving on now to Realize. The quarterly result of Realize reflects the consistency of risk management throughout the year, cautious origination, and good portfolio risk management. It is important to note that we had a non-recurring impact in 2025 of 115 million that needs to be considered in the projections for 2026, and this non-recurring impact happened entirely in the first half of the year. Our over 90, ex the effect of regulation of 4966, closed at 13.8%, in line with the previous year. Our short-term delinquency remains at low levels. This performance was mainly due to a careful credit granting model that allowed us to maintain a low-risk portfolio. In the medium term, we do not expect any change in our lending policy, given the high default scenario that continues to happen in the country. As for net income and the company's profitability indicators, net income increased 13.4% in the quarter and 21.8% in the full year, reaching a record mark of 1.5 billion BRL, reflecting improved operating performance in the retail and financial services segments, despite lower financial results and a higher effective corporate income tax rate. Earnings per share grew 26.7% in the full year, also a record mark. The 12-month cumulative ROIC increased by 2.3 percentage points to 14.7%. The continued growth of ROIC is supported by margin gains, higher asset turnover driven by inventory productivity, working capital discipline, and store expansion with incremental returns in new markets. Cash generation in 2025 remained stable at 1.4 billion BRL, a slight decreased, justified by an increase in CapEx in 2025. We distributed 1.8 billion BRL to shareholders in the period, including interest on capital and share buyback plan, which represented in total approximately 112% of the year's profit. As a reminder, distribution at this level of net income was only possible because we used reserves from previous years. Now, as for the outlook for 2026, our growth expectation for 2026 is 9 to 13%, in line with the guidance disclosed in the end of 2025 in our Investor Day. It is important to note and stress that growth dynamics for 2026 will be the opposite of what we saw in 2025. Stronger growth in the second half of the year due to a more challenging comparison base with the first half of 2025, when, as Fabio mentioned, we grew 15.6%. The composition of revenue growth in 2026 will feature an increased contribution from revenue coming from accelerated expansion. In 2025, we accelerated expansion with 23 store openings concentrated mainly in Q4 2025. These new stores will contribute to sales for the whole 2026. In addition, we will expand by 50 to 60 stores, which will contribute significantly to year-end sales. As mentioned on our Investor Day, we expect digital growth to outpace physical stores growth. In January and February of this year, we completed the transfer of old inventory from the digital channel to Cabreúva distribution center and ended sales operations via the Rio de Janeiro DC. This transfer caused a temporary unavailability of old inventory for the digital channel, impacting digital channel sales in Q1, but in a planned fashion. This situation has already been resolved. We chose to execute this phase on our strategy in Q1 because it is the quarter with the lowest sales share and lowest operational impact for the year. This was an important step in the process of centralizing sales operations at the São Paulo Cabreúva distribution center. We will continue in 2026 on our journey to expand the gross margin. We will have operational leverage in 2026 as a result of expected growth and efficiency gains. We have made progress in identifying opportunities and now have the support of a consulting firm specialized in mapping out new initiatives and implementing short and medium-term actions. As for capital allocation, we disclosed yesterday in a material fact that our proposed capital budget for 2026 is around 1 billion BRL, with a focus on opening and renovation of stores. We expect to open between 50 and 60 stores. Our expansion process remains careful and diligent, ensuring capital allocation in cities, in neighborhoods that are appropriate for our return objectives. As for capital distribution, profit distribution will be prioritized based on IOC, the buyback plan announced last year, and/or dividends, always subject to the availability of reserves and our minimum cash limit. As a reminder, the distribution guidance we disclosed last year is an estimate and does not represent a cap of distribution. In this way, we will continue our journey of ROIC evolution and value creation for our shareholders. With this, I turn the floor back to Fabi. Let us now begin the Q&A session. To ask questions, please click on the raise hand icon. In order to give more attendees a chance to participate, we kindly request that each analyst only ask one question at a time, and if necessary, return to the queue for additional questions. First question from Joseph Giordano with JP Morgan. Joe, go ahead. Good morning, Fabi, Fabio, Daniel. Thank you for taking my question. I'd like to know more about two main points. The first, leverage of sales per square meter. Perhaps we have two factors here. One is digital, as Fabio showed. He showed a lot of operational improvements and customer experience. And the second point are the renovations. We have a lot to be done during the year. Could you give us an update on how the stores have been performing, renovated stores have been performing compared to the comparable cluster? How are you seeing this? And the second point has to do with investments. We have the DC maturing. Of course, this contributes to gross margin. Daniel mentioned that he expects some expansion. So perhaps 1 or 2 more years of expansion of gross margin. And then the CapEx for technology. There are many of initiatives. The CapEx is much higher. So I'd like you to explore these 2 points. Thank you.
Obrigado, Joseph.
Thank you, Joseph.
Bom, sobre a alavancagem da venda por metro
on
quadrado,
leverage of sales per
como
square
você
meter.
mencionou, né? Ela vem
As you
do
mentioned,
digital, sim, a gente
this
tem
comes from
investido, e
digital.
acho que eu vou
Yes, we
misturar
have been
a tua
investing.
última
And
pergunta
I
ali do
think that
CapEx
I will
tecnologia, né? Quando a gente
also
fala
talk
que o
about
CapEx ele é
technology
direcionado,
CapEx.
prioritariamente a
CapEx
novas
is
lojas e
mainly geared
reformas, né? Que é muito mais
as
do
a
que foi nos
priority
últimos
to
anos,
new
que estava mais
stores.
em infraestrutura, mas a outra
In
linha
recent years, it
também
was
ele é
more
muito
geared to
direcionado em
infrastructure.
tecnologia.
And CapEx is also
Dados,
being
inteligência
directed to
artificial,
technology,
melhoria de
data,
experiência
artificial
na jornada dos
intelligence,
consumidores.
improving
Então,
customers'
o crescimento ele
journey.
vem muito do
So
digital,
growth comes a
vem
lot
muito do
from
físico
the
também, né?
digital
Acho que
channel
essa
and also
inter-relação
the
entre ambos que
physical
ela tem sido
channel.
mais
I think
importante.
it is an
Então, as
interrelationship,
melhorias que a
intertwining
gente
of
tem
both
feito no
that is
digital tem
important.
trazido crescimento maior
Improvements in
e acompanha o
digital
crescimento total,
have brought
mas as lojas
more
físicas,
improvements. It
tanto
adds to
as
total
lojas mais
growth. But
maduras têm
brick and mortar
performado
stores,
bem
both
pela
mature stores
assertividade da distribuição, quanto as
and renovated
reformadas
ones have
também
been performing
estão
well.
acima da
Both
média dos clusters, né?
mature and
É
renovated
difícil
stores are
separar
above the average of the
quantos por
clusters.
cento a mais
It's
uma
kind
loja
of hard to break
reformada
down
performa melhor do que as outras,
how
porque tem
much
várias
better a
variáveis
renovated
nisso,
store
mas
performs
eu te diria que
compared to
paga bastante
others
a conta,
because there
principalmente que a
are many
performance
variables
vem
involved,
melhorando
but that
e
performance
porque a gente
is paying our
também, né,
bills
como a gente
because
mencionou, acho que no
performance is
Investor Day
improving.
ali,
And
a
as
gente
we
conseguiu
mentioned
ter
in the
custo
Investor
de
Day,
investimento por metro
we can
quadrado,
have
seja
an
em lojas
investment
novas,
cost per
seja em
square meter,
reforma,
either in new
menor. A gente
stores
está
or in
conseguindo ser mais
renovated stores that
eficiente
is
no uso dos
lower.
nossos
We're being more
recursos de
efficient
investimento
in
também.
using our
Então,
investments.
tem trazido uma alavancagem na
So
nossa venda por metro quadrado por ambas, né?
this has been
Com
driving
relação à
up
maturação do
our sales
CD
per
e
square meter.
expansão da
As
margem
for
bruta,
this DC
está
maturation and
totalmente
expansion
ligado,
of
né?
gross
Eu acho que
margin,
não é
it's
só o
all
CD, a gente
connected.
sempre
It's not
fala,
just
né?
the
É um
DC.
processo fim a
As we
fim,
always
né?
say, it's an
Todo o modelo, desde a
end-to-end
captura de
process. It's the
tendência, a
whole
melhoria
model,
das
capturing
coleções,
trends,
assertividade
improving
das
collections,
coleções, assertividade da
assertiveness of
distribuição, daí
collections,
entra o
assertiveness in
CD, né?
distribution.
Essa habilidade que a gente tem a
It is
partir do funcionamento do
our
CD de poder
ability with
distribuir de
the
forma
DC
granular,
to distribute
né? Então,
things
isso
in a
tem ajudado
granular
e muito,
fashion.
né? A
This has
gente
helped us
tem
a
colhido esses
lot.
frutos
We have
desde a
been
estabilização
reaping
do
the fruits
CD em
since the
2024
stabilization of
e
the
continua
DC in
colhendo e a gente espera
2024, and we
continuar colhendo pela
continue
frente, né?
to reaping fruits
E ele é muito
now
importante
and
na
in the
margem
future.
bruta,
And this is very
porque quando a
important
gente
for the
olha,
gross margin because
o ticket vem subindo porque a gente
the
está
ticket has been
vendendo
increasing
produtos novos
because we are selling
e
new
reduzindo a
products
venda de
and
produtos
we are
remarcados,
reducing
né?
the
Então isso
sale of
sobe o
marked
ticket e
down
sobe a
items.
margem, né?
That
São dois
increases the
ganhos.
ticket
E
and the
ele tem sido
margin. So
incremental mês a
it's
mês.
win-win. And this has
Acho que é
been
fácil da gente
incremental
olhar no
month
nosso
after
balanço ali,
month.
a gente cresceu
It's easy
9,2% a
to
venda
see
do
in our
ano,
balance
reduziu
sheet. We
3% o
grew our
estoque.
sales 9% and
Mas um dado
reduced
qualitativo que
inventories by
não tá
3%.
ali,
But a
a
qualitative
gente
piece of data
acompanha
which
o
is not there,
percentual do nosso estoque que a gente chama do mais
so we
antigo, que é
follow
o
the
mais
percentage of
passível
our
à
inventory,
remarcação.
which is the
E esse
oldest,
estoque
more
reduziu
prone to
16%.
markdowns, and
Né?
that
Então, a gente
inventory
tem
was
conseguido ter um
reduced by
preço de entrada muito
16%.
competitivo para o
So we
nosso
have a very
cliente,
competitive
com uma
entry
margem
price for our
saudável
shoppers
e
with
ganhar
a
margem pela
healthy
redução de
margin, and we
remarcação. Né?
can
Isso é
gain
fruto do
more
modelo,
margin
o
by
CD é uma
reducing
parte
markdowns.
importantíssima
This
disso,
is the
então é
result
fruto do
of the
CD também,
model. The
mas
DC
de
is
todo o
also a very
modelo. Né?
important part of that.
Acho que eu peguei os 3
So it's
pontos.
the whole model and the DC
Joey,
contributing to
comentário
that.
de CapEx de
Joey,
tecnologia.
your comment on the
A
technology
gente percebeu
CapEx,
que ontem alguns relatórios estavam comentando, quando a gente vê no
because we
quarto
saw some
trimestre,
reports talking about
né,
that.
teve ali um comentário
In
de que houve um
in
salto no
Q4,
CapEx, sobre 2 pontos para
there was a
lembrar. A
comment
gente
that there was a
tinha
leap in
no nosso
CapEx, but
plano de
2 points to
investimento
mention
divulgado
here.
no início do
In our
ano,
investment plan disclosed in the beginning of the year, about 320 in technology, we spent 350, flat. There was a theme of phasing out. In Q4, there was slightly more spending, and basically licenses. In technology, there are some licenses that are renewed between 3 and 4 years. So we had more licensing renewed in the end of the year. The license you renew, there's a CapEx involved, but it's paid out over its use along the year. That's the only thing that I can comment on the technology CapEx. Thank you.
Obrigada, Joseph. A próxima
Thank you,
pergunta
Joseph.
vem do
Next
Pedro
question
Pinto,
from
Bradesco.
Pedro Pinto with Bradesco.
Obrigado, Fabi.
Thank you, Fabi.
Obrigado, Fabi. Bom dia. Obrigado por pegar minha pergunta. Bom dia,
Thank you for
Fábio,
taking my
Daniel.
question. Good morning,
Também vou passar por
Fabio
dois
and
pontos
Daniel.
do lado. O
I'd like
primeiro
to
deles,
mention
eu
2
queria debater
points.
pouco melhor as despesas.
First, I'd like you
Vocês
to
mencionaram
elaborate on
aqui que tem
expenses.
selling,
You mentioned
as linhas de
that in
publicidade e propaganda
selling
foram
expenses,
destaque, em
publicity and
G&A, tivemos
advertising
redução em
sales
fretes
were
e
the highlight.
utilidades.
G&A, there
Então, se a
was a
gente
reduction in
puder
utilities
navegar
and
melhor aqui
shipping.
nas linhas que devem
So could you
suportar os
elaborate on the line
2,5
items that
pontos de eficiência
should
de despesa até
support the
2030.
3.5
Claro que tem
efficiency
uma
or
porção naturalmente
percentage points in
relacionada à
efficiency?
alavancagem operacional,
There
se
is a part
pretende
related to
honrar a meta
operational
de 9
efficiency.
a 13%
If
de crescimento de receita,
If
mas
the company has
vocês
9 to
sugeriram algumas linhas que
13%
cabem
increase in
eficiência, então
revenue,
eu queria
but you
entender
suggested
se
some
são
line
essas
items
mesmo, se tem
where you could
outras
improve
e a ordem de
efficiency. Are
grandeza
these the ones? Are
via
there any
essas
others?
eficiências.
And
Esse é o
is
primeiro ponto de
that the
despesas. E o
order
outro,
of magnitude?
queria
That's my
também
first point
explorar
about
um
expenses.
pouco
The other point I'd like to
meio que do
explore
cohorte de lojas
is
abertas em
an update in the
2024 e
cohort
2025.
of stores
Claro que tem
opened in
bastante coisa que foi no quarto
2024-25.
trimestre agora de
A lot of things
2025, a
happened
gente não
in
vai ter
Q4
muito dado,
25. We're not going to have a
mas
lot of data
eventualmente
about
aquelas
that,
que
but
já estão
perhaps
aí mais
others that have
maior
been
ramp-up de
opened
vendas
for longer,
delas
I'd
e
like to
também
know
coisas que
about
mesmo
the
as mais
ramp-up of
novas já conseguem
sales.
dizer, né?
And
Timing
things
de
that the
escolha do
newer
ponto, lançamento da
stores
loja, custo de
can
ocupação de
inform
pessoal
us, the timing, cost of occupancy,
ocupação de
personnel,
pessoal versus o parque atual.
versus
Enfim,
the current
quantificar isso seria pouco legal
lot of
também,
stores.
porque a
If you could
aceleração
quantify that, it would
das
be
aberturas de agora
nice,
em diante, essas métricas vão ser legais
because
a gente
with the
acompanhar de perto.
acceleration of
Obrigado.
store openings that is coming, it would be nice to follow these metrics. Thank you.
Obrigado, Pedro. Comentando pouco aqui de despesas.
Thank you,
Bom,
Pedro. Speaking
primeiro,
about expenses,
você
well,
mesmo comentou,
first,
a gente
as you said
entregou
it yourself,
a
we
alavancagem operacional no ano
we
de
delivered
2025 e é o nosso
operational
objetivo
leverage for
entregar ao
2025,
longo
and
do
it
ciclo
is
de
our
2026 até
target to deliver
2030,
this
né?
over the
Temos duas
2026-2030
alavancas, que são aquelas duas
cycle.
alavancas que a
There are
gente comentou.
two
Primeiramente, a
drivers that we
capacidade da
mentioned.
companhia de
First,
entregar
the company's
crescimento, que nós
ability to
estimamos entre
deliver
9%
growth
a
that we
13%,
estimate
e
between 9 to
conseguir fazer essa entrega
13%.
sem
In
necessidade
doing that,
de
delivering that
investimentos
without the need
assim, maiores em
to
despesas, quer dizer,
to
você
have
consegue
greater
entregar esse
investments.
crescimento fazendo
In other
uso de
words,
uma base de
delivering growth
despesas
by
instaladas que te
using an
permite ganho de
installed
escala.
expense
O outro
base that
componente
will
é a
allow us to
eficiência,
have
né? E
gains
pouco
of
do que eu
scale.
comentei,
The other point is efficiency.
agora no meu discurso final ali de perspectivas para
It's what I
2026,
mentioned
a
in my
gente
outlook
já
for
identificou
2026.
algumas
We have
oportunidades.
identified
A gente tem
some
uma consultoria
opportunities
externa que
already.
está trabalhando
We
com a
have
gente
an
no
external
sentido de
consulting firm that is working with us
revisitar essas oportunidades e
to
trazendo novas
revisit these
oportunidades e a gente
opportunities,
articulando um
come
plano
up
de
with new
implementação para
opportunities,
que a gente
so
possa
that we can
implementar
adopt
essas
an
oportunidades.
implementation
Da
plan,
onde
an
que tem
action
essas
plan to implement
oportunidades? Eu diria
these
para vocês, existem
opportunities.
oportunidades tanto em
Where are the
selling
opportunities
quanto em
coming
G&A.
from? There are
Então,
opportunities
quando a
in
gente está
selling
revisando,
and
não
G&A
existe
expenses.
único lugar onde a gente
There
possa
is not
encontrar
just one single
oportunidades.
sweet
A
spot
gente acredita
where
que
we
a
can
gente possa
find
encontrar oportunidades em
opportunities. We
todas as
believe we
linhas,
can find
no sentido de
opportunities
ganho de
across
eficiência,
the
no
board
sentido de
in
eventuais
terms of gaining
atividades que possam ser
efficiency
desempenhadas
and
com mais
possible
eficiência,
activities that
eventuais
can be
atividades que possam
performed
deixar de
with
serem feitas,
more
é o tipo de
efficiency,
trabalho que
some
a gente está
activities
fazendo
that can
junto com
stop
essa
being done.
consultoria.
And that's the work
Com
that we're
relação
doing with
às
this
lojas abertas,
consulting
eu
firm.
diria para
And
você
as
que elas
for
estão
open
se
stores,
comportando
I
dentro
would
do
say that
planejado.
they are
Essas
behaving
lojas
as
têm
planned.
perfil
These stores
aonde, por lado, elas são
have a
lojas com
profile
metragens
where, on one
menores
hand,
e
they
com
are
isso ela tem realmente uma
smaller
venda por metro
stores,
quadrado que é
and
pouco
of
menor
course,
do que a
they
nossa
have
base, porque
a
a base
sale
ela
per
tem
square meter,
uma
which is
metragem
lower
média de
than
metro
our
por
base,
loja maior,
because we have an
mas elas
average
apresentam
bigger
custo de
size of
ocupação
stores,
e
but there's an
custo
occupancy
de força de
cost
trabalho, quer dizer, quando
and
a
a
gente vê as
personnel
despesas
cost
totais de
when we
SG&A
look
dela,
at total
menor do que a base instalada
SG&A.
do que a gente tem. E é
That
por
is,
isso que ela
it is
permite,
lower
né,
than the
e
installed
ela
base we have.
colabora
And that's
com
why
avanço de
these stores
rentabilidade da companhia.
collaborate more in terms of company's
Show.
profitability.
Obrigado, Daniel.
Thank you very much, Daniel.
Obrigado, Pedro.
Thank you, Pedro.
A próxima pergunta vem do
Next
Bob
question
Ford,
from Bob
do Bank
Ford
of America Merrill Lynch.
with Bank
Bob,
of America
pode
Merrill
prosseguir.
Lynch. Bob, go ahead. Thank you, Fabi. Good morning, Fabio, Daniel. Thank you for taking my question. Fabio, as you improve the supply chain and efficiency, how should we think about working capital and additional improvements to gross margin? And what are you thinking in 2026? And what is the percentage of collections, especially the winter collection? Thank you. Thank you, Bob. It is what we mentioned before. I think that the key point about our model is to be able to produce closer to in-season periods when we have demand. That varies a lot in terms of collection assertiveness. We have the ability to produce 15 to 25 or almost 30% of our production happening in season. We are working to get that up to 40%, which is what we think is necessary. Well, there's a part of basic items, more constant items. So we have been working on that, and I think that this is bringing us margin gains and cash flow margins. We start having turnover inventories, so we have improvement in ticket margin and cash flow. And the trend is that we are going to have a gradual and continuous evolution. We expect to continue to have gains in inventory turnover, margins, etc. As for the winter season, more specifically, that's a more challenging season in the end of the cycle for us, both due to greater penetration of imported items and also the risk that we have a smaller collection time. We spoke about this last year. We have already implemented some initiatives in terms of having a faster flow of imported items or to replace some transition products by national items. That's what I mentioned. It's an opportunity during seasonal transitions, and that applies to several moments. What we have seen in our model and with the evolution of our model is that historically, at some moments, end of cycle of summer or winter, when we are starting spring or fall, these ends of cycle historically depended more on marked down items. So what's happening is that we are having fewer and fewer markdowns, and we are able to turn over our inventory faster and faster, which is very good. So we are testing. A part of the opportunistic sale will be reduced, but we can replace part of that sale by new items with a higher ticket and a higher margin for the company. That is an important opportunity for us. So we're testing this. Of course, we have to test what kind of product is accepted, because it's not a clear to-from relationship. But we've been testing this, and we've had a good response with some of these items in recent cycles. So we see good performance of new items replacing those sales and generating margin. I think it's a gradual evolution that we're going to see, as I said in my opening remarks. This applies to both end of cycle, seasonal transition, and weather variations. I think that this is an opportunity that we're starting to see. We're starting to see good results, and we believe that gradually this will also continue to evolve. What are you thinking about 2026 and consumer demand? That's an important question, and I think that Daniel kind of spoke about this in his remarks. We don't want to comment on quarters that are underway. So your question is good for us to speak about the full year outlook. Last year, 2025, when the year began, we spoke a little about this. Then we had an expectation of a greater first half and a second half of the year with low growth for a number of reasons. There are many variables: comparable base, planning, macroeconomic situation, which over 2025, for a long time, we saw consumers more under pressure, and we felt that in the end of the year. Now, things happened in line with our expectations, not exactly the same. The first half was stronger. We grew 15.6%. Second half, we posted about 4% increase. We got to 9.2%, which is very much in line with what we're expecting for 2026. We're speaking about 9 to 13% for the coming years. But as Daniel said, for 2026, our year expectation is the reverse. For a number of reasons, we expect a first half growing less and the second half growing more. And one of the main reasons is this inversion of the comparative base. We're going to have a stronger base in the first half and a weaker comparison base in the second half. So that already changes the expectation. And there are other reasons as well. Last year, we saw customers being under pressure, more and more under pressure, because the interest rates were very high, were very long, and the expectation this year is, okay, interest rates are already high, but the expectation is that interest rates will ease over the year. So the comparative base, the easing, and our operational planning, put it all together, our expectation in that range of 9 to 13%. We don't expect equal quarters, of course. A first quarter weaker, second quarter stronger, but growth along the year, along the quarters, as the quarters unfold. Okay, very clear. Thank you. Thank you, Bob. Next question coming from Vinicius Strano with UBS. Vini, go ahead. Good morning, Fabi, Fabio, Daniel. Two questions. If you could comment on how you're seeing price positioning of the company compared to the main competitors, and how is the customer perception regarding pricing and the Renner brand? How do you see this evolving? We see inventories improving, the company generating a lot of cash. I'm just trying to understand whether you have any room for reinvesting part of the gains to increase commercial competitiveness to drive volume. My second question is regarding credit. If you could comment on how you see the expectations for Realize, speaking about the new cohorts of customers. Your private label sales are slightly lower than historical levels. With declining interest rates, do you expect a different demand? Well, I'll start with the first part of your question, positioning of prices. Daniel will speak about credit and Realize. So here's what I can say. In our view, our price position is very adequate. We're very competitive. We have heard some complaints about promotional activity in the industry. I think that there are many players trying to adjust their prices and positioning. We saw some competitors at some points with very high prices, and we were very consistent in our pricing strategy. I think we have very competitive entry prices. Our model, with the reduction of old inventories, has allowed us to boost our gross margin, and this is very important to maintain competitiveness in our positioning. Of course, things are very fluid. Things are a living organism. The market is adjusting itself all the time, so we are always looking at pricing vis-a-vis our competitors, what matters for our shoppers. But I would say that on average, our prices are very much in line with inflation. And I think that customers do value that. We have seen consistent improvement in our NPS, focused not only on customer experience, but products. Our products are improving in quality, assertiveness, with greater price competitiveness. And the other part of the equation, we are growing in price. It doesn't mean higher price, it means lower markdowns. And that's very sustainable for us because it's a result that comes from greater efficiency rather than an attempt to gain margin by increasing prices. Our prices are very well positioned. Vini, speaking about Realize, over 2025, we were very cautious in our originations. On one hand, this is reflected in the quality of the portfolio and levels of delinquency of our portfolio. We do not believe in the short term in any change. We'll continue to be very cautious and prudent. When we look at delinquency levels in the market, there was a certain deterioration if we consider the middle of the year now, which means that we will continue to be prudent and cautious. On one hand, this, of course, reduces the potential to expand the customer base and the portfolio. When we look at a loss of share of our card, it's a reflection of that. We believe that as the macroeconomic scenario improves, we'll be able to increase our originations. On the other hand, it is what we mentioned in our Investor Day, which is the value proposition of Realize. We have plans to continue to strengthen that value proposition. One of the milestones is the new processor. It will be available in the second half of the year, and this will allow us to bring in other elements in the value proposition, which will allow us to combine a possible increase in origination with a better value proposition. This will allow us to recover the share of the Realize card in Renner's sales. Perfect. Thank you very much. Thank you, Vini. Next question from Eric Huang with Santander. Eric, go ahead. Thank you, Fabi. Good morning, Daniel, Fabio. I would like to address the digital channel. You mentioned it is an important driver of growth in the coming years. I'd like to talk about profitability. You mentioned that profitability is improving. So looking at the sales mix, how much more has the share of sales evolved on that channel? And what is the gap? Thinking about EBITDA margin of the channel versus brick-and-mortar channels, how's this evolving? That's number one. And my second question, very quick one, regarding performance of Renner stores in shopping malls, where international players are also going. There was a comment about that, that it kind of drove sales. I'd like to understand that. Thank you. Thank you, Eric. I'll start with the last one, and then I'll turn the floor to Daniel for your first question. As regards opening of international stores of international competitors, I agree with the observation of another player. Since these are few stores in a large universe of shopping malls, when a new store opens, which is a novelty, of course, that brings foot traffic to the mall. But we're very competitive. Our performance in the shopping malls where these stores are opening, well, it's a good performance, a better performance. They haven't impacted us. As for the profitability of the digital channel, thank you for the question. First, our strategy is an omni-channel execution. So we aim to be very transparent in how we execute things. When we look at the digital channel is one of the big advances we had in the period. We talk about the cost of operating the channel, the investments we made in the centralization of all sales of the digital channel in the Cabreúva DC that allows us to have a similar cost of operation. Today, the growth we have in brick-and-mortar stores or over the digital channel, this does not increase operational expenses because we have the cost to operate both channels operating in a similar way. This is the result of investments we made, and it's something that in the future will allow us to work with both channels without a concern of having expenses increasing related to one channel or another. Okay, thank you very much.
Obrigado, Eric.
And congratulations on the results.
Próxima
Thank you, Eric.
pergunta vem da Dani
Next
Eger,
question
da
from
XP.
Danny Eger with
Dani, com
XP.
você.
Danny?
Bom dia, pessoal. Obrigada
Good
por pegar
morning.
minha pergunta.
Thank you for
Prazer em
taking my
entrevistá-lo.
question.
Minha
Congrats on the
pergunta é
results.
quase que
My
uma
question is
sequência da que eu acho
almost
que eu
a
fiz no último
follow-up
call, né? Eu
question
lembro
of
que
what I
eu
asked
perguntei para
in the
vocês
last
do que vocês
video conference call.
assim,
I remember I
estavam
asked you
fazendo para
what you
voltar a
were
ser o
doing
outperformer do setor,
to
como vocês
go
sempre
back to
foram, né?
being the
E eu acho que
outperformer
esse
of the
tema ele
industry,
aparece
as
dando
you
alguns
always were.
sinais
It
nessa
seems that this
direção, né? Essa
quarter is
questão
pointing in that
dessa reação do
direction.
in-season, que até foi
You're
um ponto
talking
que no
about
terceiro TRI
in-season reaction.
vocês comentaram
It
que
is a
vocês ainda
point
não
that in
estavam
Q3 you
fazendo,
mentioned
poderiam ter
that you were
feito,
not doing
enfim.
that. Could have
Mas eu acho
done
que
it.
seria legal
But,
entender um pouquinho das
I think it
mudanças,
would be
assim, como
cool to
essa,
understand the
que
changes,
talvez sustentem,
such as
além
this
de
one,
todo o modelo
that
que
can
vocês
sustain,
comentaram, mas
in
eventualmente até de
addition to the whole model,
posicionamento,
as you
falaram dessa questão
mentioned,
das
in your
collabs,
positioning. You talked about
eventualmente eu lembro da
collabs.
Fabi Tacola falando
And I
também de
remember
revisitar
Fabi talking
submarcas
about
dentro da Renner, da
revisiting
forma como um pouco a loja
sub-brands of
ela
Renner
é meio que distribuída e
and how the
montada. Então,
store is
acho que minha
distributed
pergunta é mais
and
entender
assembled.
assim, o
So my
que
question
tem sido
is
feito na
trying to
operação de
understand
fato,
what you're
de novo,
doing in
fora
the
o modelo que a
operation
gente
itself,
já conversa bastante
other than
sobre,
the model, because we talk a
para
lot about the
sustentar esse
model.
crescimento
But at the
ou essa
store
mesma
level, to
outperformance olhando para frente. Se
sustain
você olha o
this
9 que vocês entregaram em 25,
overperformance.
ele foi muito
Because
amparado no
if we look
primeiro
at the
semestre, mas teve
9%
uma
you
questão
delivered
também
in
um pouco de base,
2025, it
obviamente,
was much driven
execução
by the
boa,
first
mas enfim,
half.
pensando o que
Of
vocês
course, there
estão
was a
aí
customer base, good
construindo para
execution,
sustentar
but
que
I'm
isso
thinking
também
about
se repita ou
what
até
is it
supere
that
em
you are
2026.
building
Obrigada.
to
Obrigado,
overcome
Dani.
the difficulties in
São
2026?
várias variáveis, né? Você citou
There are
algumas
many
delas ali,
variables. You
são
mentioned
bastante
many of
importantes, né?
them
Acho que a gente,
that are very
e é o que a gente
important.
tem dito desde o início
It
dos
is what we
nossos
have been saying
investimentos na
since the
evolução do nosso
beginning
modelo,
of our
que a gente tem uma
investments
expectativa
in the
que
evolution of
seja um
our
ganho
model.
gradual,
The
né? Que a
expectation
gente
is that we'll
continue
have gradual
ganhando, né?
gains,
Acelerando, né?
gradual
Nossos ganhos
improvement.
ao longo
We
de
will
um período
continue to
longo, né? Por isso
accelerate
que
our
também a gente
gains over
falou
a
do
longer
horizonte de
period of
26 a
time.
30,
And that's
e a
why
gente
we have a
espera ter
2026,
uma continuidade de
2030 cycle,
crescimento,
because we
de
expect to have
margem, né,
continuity of
de ganho de
growth,
eficiência
margin
nesse horizonte,
improvement,
né, por
efficiency
muito
gain
tempo.
in
Acho
that
que
time
e
horizon
aí são
for a
várias
long
variáveis,
time.
né? Tem o
And there are
CD que
many
todo mundo
variables. We
enxerga
have
que
the
ele vai
DC that
ganhando
we all see.
não só
The
produtividade
DC
de
will
operação,
bring
mas
about
a gente vai
operational
ganhando assertividade de
productivity, but
distribuição, né? Então a
also
gente vai
distribution
conseguindo fazer uma
assertiveness.
coisa que no passado
We
não se
will be able to
fazia.
do something
Então,
that was not
conforme você
done
vai
in the
fazendo, você vai
past.
melhorando
And
sua
as
eficiência,
we
isso é um
do it,
ganho,
we
né?
increase efficiency. That
As
is a
próprias
gain.
decisões, né, de você ter a
And
velocidade para
our
produzir em
decisions of
season,
having
você
speed to
começa a
produce
fazer
in
isso cada vez de
season.
uma forma mais
We start
robusta e mais
doing
eficiente
that in a more
também. Você
robust
vai
and
ganhando
efficient way.
assertividade, por isso que a gente
We
fala que é
gain
gradual. Você
assertiveness,
vai
and that's why we say it's a
aprendendo,
gradual
incrementando, né?
process.
A
We
própria
learn as
questão,
we go and we
você não sai do
increment and
8
we
para o
learn.
80, né?
We
Senão
don't go from
são
8
medidas
to
muito drásticas
80.
que podem trazer problemas em vez de oportunidades, né?
Because if we do
Então,
that, we can
a
have
gente tem
problems
feito isso de
rather
forma
than
gradual,
productivity.
as
We
oportunidades de
prefer to
novos
do it
produtos, né? Essa
gradually. We see
substituição da
opportunities
venda de
of
um
new
produto
products
remarcado por um produto
replacing
novo,
markdowns by
não é
new
trivial, né? Tem gente
products.
que está
This
procurando
is
só
not
uma remarcação,
trivial.
tem gente que está procurando um produto
Some
novo.
people
Então,
are
em
just
que
trying to have new
tamanho a gente
products, and some
consegue
people
fazer
are
isso,
just
com que
trying
tipo
to
de
have
produto? Então,
markdowns.
a gente vai
So
fazendo, vai testando, vai
how can we do
funcionando,
this?
vai
With what kind
descartando o
of
que não funciona e
product?
vai
We
evoluindo, né? A
test, we see
própria
what
marca
works,
Renner,
we
com essa
disregard
pegada
what
cada
doesn't
vez mais
work.
de
The
moda, não
Renner
só
brand,
local de
more
se vender
focused on
moda, mas
fashion. It's not
uma
just a
marca
place
mais de
to sell
moda e vem
fashion, it's more of a
crescendo, né,
brand
na visão do consumidor,
fashion,
sendo
a
reconhecida cada
fashion
vez
brand
pelo
actually,
consumidor.
and it's being
São
more and more
várias ações
recognized
coordenadas, né?
by our
Ah,
consumers. So
então,
there's a
acho
whole
que
array
tem
of
muitas
actions
ações que
that
a
are
gente
very
faz
much
em produto,
coordinated.
em
We have a lot of
distribuição,
actions in
abastecimento,
product,
em operação e
distribution,
produtividade,
fulfillment,
em
operation,
marca, em
productivity,
jornada do consumidor, que
brand,
juntos,
and
né, é onde a gente
customer
espera
journey.
continuar tendo essa evolução, esse
Putting it
ganho
all
de
together, that's
produtividade, de
how we
eficiência, de
expect to have
geração
a
de
gain in
valor,
productivity,
com um
efficiency,
crescimento
value
rentável
creation,
ao longo
with
de 26 a
profitable
30, né? Por
growth
isso que a gente
in
anunciou o nosso
2026
plano
to
ali,
2030.
e
And that's why we announced our
é uma
plan in that
soma de tudo
time
isso, né?
frame. So it's the sum of
Excelente.
all of
Obrigada.
these
Parabéns aí
parts.
pelo resultado.
Excellent. Thank you very much.
Obrigado, Dani.
Congratulations on the results. Thank you,
A
Danny.
próxima pergunta vem do
Next
Rodrigo
question from
Gastim, do
Rodrigo
Itaú BBA.
Gastim with Itaú BBA.
Gastim, com você.
Gastim,
Dia, pessoal. Bom
good
dia,
morning.
pessoal. Fábio, queria explorar um pouco melhor
Fabio, I'd like you to
essa
explore
dinâmica que eu achei interessante, que você falou de
this
expectativa
dynamic which I thought was interesting, internal expectation in different first and second half. I'm not speaking about the quarter. I know you don't want to speak about Q1. It makes sense. I just want to understand, because when we monitor, Renner, when we look at the growth of the apparel segment with the a weighted average of the 440 stores that Renner has in different states, we see the EDAT of Renner, the market where Renner operates, are growing almost 4 percentage points versus last year, a relevant, a significant acceleration at the beginning of the year. So I'd like to understand the logic of first versus second half of the year, but seeing this substantial acceleration of EDAT, and considering that you should not be losing market share, it's a hypothesis, I'd like you to comment. My question is, can you really have a qualitative perception that is similar to what we see in EDAT? Thank you, Gastin. As you said it yourself, since we give you a guidance between 9 to 13% on annual basis, we are not going to be commenting on the quarter that is ongoing. We will make comments on the reported quarters. But in terms of the year, our intent here is to reinforce that never are the quarters the same. If we look at 2025, the full year that we are reporting on, there is a dramatic difference of growth quarter after quarter. And when we put together our plan and expectations for 2026, in the annual year, it's between 9 and 13%. It is what we expect for the year. But considering difference in the quarters, just like last year, when we look at our expectation and when we look at our plan, just this would explain the difference between half years and quarters. In addition, there are other factors. Last year, interest rates increased a lot and continued high. But this year, there's an expectation, I don't know whether it will materialize, of declining interest rates, which should benefit the end of the year. And Daniel mentioned that we put pressure in the beginning of the year with a positive and necessary transition, and we're benefiting the end of the year with a more substantial number of store openings. When we sum up all of the variables, we expect a greater growth in the second half of the year, growing over the year and get into that range, but with a lower growth in the first half.
Perfeito. Então, só para entender a lógica.
So to understand the rationale, it's very clear actually. Since the first half, you have a comparative base, which is harder. And using the low range of 9%, and that's my own analysis, okay, a mathematical perception. It is probable to have 9% in the first half. So a double digit would be expected for the second half of the year, a difference between the half years with a more substantial acceleration in the second half. Is that what we should expect? Yeah, we're expecting weaker first half and stronger second half. Perfect. And then if I may ask a quick question about buybacks. You created reserves with Q4 profits, very much in line with what you have been saying. What do you use, Daniel, as a criterion to press the button of buyback? Is it share price or the moment of the company? I just want to understand the criteria. How do you define and you trigger the process of returning capital to shareholders, specifically with share buybacks? Well, on one hand, it's the composition of the balance of reserves, as you mentioned. The moment we disclose Q4, we recompose it. We monitor share prices, and we have some good governance criteria regarding the percentage that we can purchase. We always try to have a cap of 5 and 10% of the daily volume. But that's kind of the logic, the rationale we use. And that's the rationale we used the last year. It will be very similar to the dynamic we will be using this year as we recompose our reserves. We'll look at the share prices and we will be executing the buybacks over the year. Perfect. Clear. Thank you very much, Daniel, Fabio, for the answers. Thank you, Gastin. The next question from Irma Sgarz with Goldman Sachs. Irma, go ahead. Good morning. Thank you for the opportunity. About advertising, advertising spending that dropped 17% year-over-year. From what I understood, perhaps part of that comes from digital, where you generate more and more organic traffic, and perhaps you have more intelligence and discipline in spending. But I'd like to understand, what other levers, in addition to that one, do you have or have you had in recent months? And any more improvements expected in that line item for 2026 and beyond? And related to that, because I don't want to disregard the 10% growth that you posted in digital, which obviously was great. But I'd like to understand, how do you see the market? Some digital market segments are growing at higher rates. Perhaps we cannot break it down to the apparel segment, but I'd like to understand in digital, looking at the digital segment, you gained market share vis-à-vis the market as a whole. Perhaps you could tell us what you're thinking about balance of expenses and growth in the digital environment. Perhaps you chose to grow 10%. You could have grown 15%, but then your profitability would be reduced. I don't know whether the question is clear, but that's the direction. I think it is clear, Irma. I'll start with the end, and Daniel will speak about expenses. When you talk about digital, I think that there are many ways of measuring it. We have been gaining share in our segment. We have been seeing a lot of more compressed margins, too much promotional activity on digital by some peers. And I think that your question involves a balance between market share growth and margin. Our strategy is to grow with profitability. We don't give up on margin. We're not doing a lot of promotions to grow in digital. We have been gaining efficiency and profitability in digital. Of course, if we had more promotions, we would have grown more. That's a direct relationship. But we believe that we can continue to grow. We can continue to gain market share with a differentiated value proposition. We have to remember that our products are unique. They are ours. No one else sells our products. So it's not a price competition for the same product. We're betting on that, on our positioning, our power as a brand, our fashion power. And this has given us good results. We have been balancing growth and margin. We want to grow with profitable margins. This is what we are pursuing. It's our continuous pursuit. And Irma, perhaps to reinforce, when I answered the question by Eric from Santander, when we spoke about the omni-channel logic, today, shoppers play in both channels. They can start online, end up offline, and vice versa. And the integration of the channels is key to have a good balance of expenses. And to work well, not just the profitability of one single channel, but the whole picture. And this is our big challenge in our day-to-day. And this is our strategy to gain productivity, because at the end of the day, what matters to us is to grow the whole. And that's why we have that indicator of productivity per square meter. On digital, as Fabio mentioned, knowing how to work well on social media with the influencers, it involves a whole dynamic in the way in which we operate the on and offline, which is key for our success. Of course, we look and see that the digital channel is growing more, and we're able to perform there. It leads to market share gains as a whole, and we continue to gain market share on digital. And it's kind of what you mentioned in the beginning of your comments. You kind of asked and gave us the answer. Because at the end of the day, advertising. The reduction in advertising expenses in the period is the result of this optimization. We continue to optimize investments in the digital channel. When we have more of our own traffic that comes from this social media strategy and influences, we can reduce investments on digital without giving up or hurting our competitiveness and presence on digital. It's part of our strategy. We will continue to evolve over the coming years because this is key for our competitive growth within this omni-channel logic. Thank you.
A próxima pergunta vem do
Next question from Ian Siskin with BTG. Ian, you may go on.
Bom dia, Fábio. Bom dia, Daniel.
Good morning, Fábio. Daniel, I have just one question.
Vocês falaram bastante aqui sobre as
You
alavancas de
spoke a lot
margem, né, que
about
inclusive foram
margin
bem
levers
visíveis
or
aí no
drivers
quarto
that were
trimestre.
very visible
A
in
minha pergunta
Q4.
aqui é mais sobre a
My
ótica
question is
da
more
pirâmide de produtos e sortimento,
on
né?
the logic of the
Qual o
pyramid
plano
of
hoje da companhia,
product
principalmente
assortment.
nos
What
produtos
is
de
the company's
entrada, dado o
plan,
cenário de
mainly for
consumo
entry-level
mais
products,
desafiador
given
aí
a
do Brasil
scenario
e
of
como
more
tem sido
challenging
essa
consumption
estratégia?
in Brazil?
E
So
se
what is
vocês
your
imaginam uma
strategy
manutenção,
regarding
né, dessa
that?
estratégia
And do
que a
you
gente viu aqui
expect you will sustain
no quarto
the
trimestre?
strategy that
É
we
isso,
saw in
pessoal.
Q4?
Obrigado.
Thank you.
Bom, Ian, obrigado pela pergunta.
Very well, Ian. Thank you for the
E assim,
question.
como a gente falou, né,
Here's what
em
I can tell
produtos
you.
de entrada,
As
a
we
gente está
said, in
com um preço
entry-level
bastante
products, I think that
competitivo,
our prices are
assertivo no
very
nosso
competitive.
posicionamento, né?
We
Os
have an
produtos
assertive
têm
positioning.
uma
Our
boa aceitação,
product
uma
has
boa
good acceptance,
proposta de valor aí para os nossos
a good
clientes.
value proposition
A
for
gente tem
our
visto
customers.
também no nosso
We have also
produto
seen
meio de pirâmide core
in our
também uma
middle of
boa
the pyramid core
competitividade.
products that
E
we are
acho
also
que o
very
grande ponto que a gente
competitive.
tem ganho
And I
cada
think
vez
that
mais ali na margem, né? E
what is
temos a
driving
oportunidade de
more
continuar
margin
ganhando
gain and where
é
we
no
have
produto de
more
moda, né?
opportunity to
Que o
continue
cliente
to
nos
gain
procura
is
por esse
with those
expertise de moda, por
fashion
esse
products.
conhecimento de moda,
Shoppers come to us due
com
to
uma
our
proposta
fashion
de valor
expertise,
bastante
fashion
adequado, né?
knowledge with
Então,
a
um
very adequate
produto
value proposition.
antenado com informação
So
de moda que
these
muitas vezes também
products
acaba virando
tuned
meio de
to
pirâmide, né?
fashion. And this also
Então, acho que
kind of
essa
becomes the middle of
estratégia
the
que
pyramid.
ela tem trazido muito
And this
valor e
is the
muita margem,
strategy that is bringing
né?
a lot of value
E
and
nos permite
margin
até, quando
for
você
the
fala de
company.
sortimento,
And
né? E
when we
aí que dá
speak about
oportunidade,
assortment,
a gente
and that's
agregando,
where the
né?
opportunity
E
lies.
lógico que isso não é nenhuma mudança
Well, of
drástica, mas
course,
a
this
gente tem
is
visto
no dramatic
oportunidade de
change, but
agregar
we
um
have
pouco
been
mais de
seeing
produto,
opportunities
né?
to add
Principalmente nos
a few
ciclos
more
finais ali, como
products,
eu falei, nas
mainly in the
transições
end
e
of
variações
cycles during
temáticas,
seasonal
trazendo, né?
transitions
Tanto meio
and
de pirâmide
and
quanto
weather
informação de moda,
changes. We bring
de uma
something
forma
in terms of
cada
middle
vez
of
mais
the
antecipada
pyramid
e
and
tem surtido
fashion,
efeito,
trying to
né? Então
anticipate
acho que
this.
isso
And this is
na
bringing us
pirâmide
good
como um
results.
todo
So in the
traz uma
pyramid as a
oportunidade
whole, this
de
brings
leve
about
aumento de
an
preço
opportunity of a
médio, não
slight
por aumento de preço
increase in
específico de
average
produto, né?
price,
O de
not a
entrada, acho que ele está bem
specific price
competitivo
for a
e a gente
specific
continua
product.
ali.
And the entry-level products are at a very competitive
Ótimo.
level.
Obrigado, Fábio.
Thank you, Fabio.
Obrigado, Ian.
A próxima pergunta vem do
Next
João
question
Soares, do
from
Citi.
João Soares
Por
with
favor, João,
Citi.
pode prosseguir.
João, please go
Obrigado,
ahead.
Fabi. Bom dia, Fábio, Daniel. Bom dia,
Good morning,
pessoal.
Fabio, Daniel.
Algumas perguntas rápidas aqui.
I have
Só
some quick
para elaborar,
questions.
ficou super claro esse ponto da dinâmica de vendas
I
ao
think
longo
it's
do ano.
very clear in terms of
Só
sales
queria ver
dynamic
contigo,
over the year.
fazer
But
um
Fabio,
exercício mental para
I'd like to do some
só
mental
os
exercise
três
with
principais
you
moving parts aqui, quando a gente
on
pensa
the
em
three
volume,
main moving parts when we
ticket
think about volume,
e preço, né? Só para a
ticket,
gente ter na cabeça
and
assim,
price,
o que deveria, né? Porque
just so
acho que
we
ano
know
passado, principalmente segundo semestre, o grande
what
problema
will
foi o
move the
volume, né? A
needle.
gente tinha uma base forte de volume,
Because last year we had a
todos
strong
bem
volume
sofreu, a
base,
gente
the
viu
whole
no relato
industry
de segmento, então
suffered.
assim, queria ouvir um pouco assim, como é que está a
We
tua
saw that
cabeça,
in data of the segment.
e olhando,
So,
né, acho
what
que
are you
tem um ponto
thinking about
relevante
this?
aqui,
And
por
there's also a
exemplo, com o
relevant point
afrouxamento de
here.
juros voltar ao
If
ritmo
we
de
have
originação, né, isso
declining interest
diretamente,
rates
provavelmente
and
no
you go back
semestre,
to the original
se isso
origination
aqui está
level, this will
inclusive
help
na
our
perspectiva,
analysis.
né, ou seja,
Is this
se
going to
não
happen in
for
your expectation?
corte agora, for ciclo mais hawkish,
If we
isso aqui
have a more
pode, né,
hawkish
afetar a
interest rate
perspectiva.
cycle, could this impact your
Bom,
outlook?
João, obrigado pela pergunta. Acho
João, thank you
que
for
sim,
the
né? Acho que
question.
é
I
uma, é
think
uma
that,
soma, né? Quando a gente
yes,
fala da
it's
perspectiva ao
the
longo do
sum of
ano,
everything. When we speak about
tem
the
o efeito
outlook
de
for the
base, né? Que
year,
ele
there
é
is the
relevante, né?
base
Se a gente olha a
effect,
base,
which is
os
relevant.
crescimentos do ano passado
If we
são
look at
bastante
last year
distintos, né? Então esse
growth,
efeito de base ele é
it's very
importante.
different. So the
E
base
tem
effect is
também a parte dos
important.
juros, né?
And
Acho que
there's
a partir do
also
momento que você
the
começa a
element amount of interest rates. When we start having an easing of interest rates, we put less pressure on consumers, and they have a greater ability to pay, and with a lower risk environment. It's a virtuous cycle. When for a long time you have a lot of pressure, that worsens ability to pay. But when you have easing, you improve everything. In a lower risk environment, you can go back to granting more credit, and this will lead to more sales. Our expectations, well, interest rates will start declining over the year. So in addition to the base, we have higher expectations for the second half of the year. And internally, we opened a lot of stores in the end of 2025. These stores will gain productivity, will know more about their customers over the year, and they will trend up. And so we expect an improvement in the second half. And then we'll be adding more stores this year. If we think about average growth in 2024, it was basically net zero. In 2025, average area growth was about 1% with 1.8 in the end of the year, which kind of drags this to 2025 in the average area growth. When we speak about 50 to 60 stores expected, it's about 3% on average this year, getting to 4 in the end of the year. All of that, last year's stores and the stores we're going to open this year, will all help the second half of the year. So these are the three main moving parts: the base, the easing of the interest rates, and operationally speaking, we'll have more power coming during the year, mainly more towards the year end. Excellent. And if I may touch on another point. It has to do with what you disclosed in the Investor Day, about 50% of payout. In your opening remarks, you mentioned that it could be higher than that. We see that you have a new buyback program. You have a cash position that is very strong. And thinking of what you distributed in 2025, it was above the guidance that we expected. So it seems we have this impression that in 2026, you should go over the cap because you're well positioned for that. So I just want to be a little provocative regarding that, Daniel. What matters is, let's analyze 2025. As I mentioned, we used reserves of prior years. We started the year with 0 reserves, and we will recompose reserves with the Q4 results. As we explained in the Investor Day, the rationale is I'll seek to distribute our reserves as they are recomposed. And looking at our cash generation, limited to what we consider minimum cash internally. If we create more reserves, and if this is coupled with a good cash flow generation, we have the potential to be able to exceed the cap of the guidance, which is what I mentioned. The guidance is a guidance, it's a range, but it's not a limiting factor. If we have better cash flow generation, we might distribute interest on capital. It will always have a priority given the tax advantage. We can supplement that with a share buyback or perhaps an extraordinary dividend payout. That's kind of the dynamic, but we'll have to see how this will evolve during the year. If we have more cash flow generation, we might exceed the cap, the upper range. Okay, thank you. Next question from Andrew Ruben with Morgan Stanley.
Hi, thanks very much for the question. 2 topics from my side, please. First, so you mentioned the consumer pressure from reduced purchasing power, but I'm curious if you're seeing any type of divergence in your stores that cater more towards higher income consumers versus lower income. And then second, curious also for street versus non-street stores, any differences you're seeing in performance, and also as you look to the opening plans for this year, how you're looking at mall versus street stores for the plans. Thanks very much.
Thank you, Andrew.
Thank you, Andrew. As for the first part of the question, I would say that we haven't seen any dramatic change in consumption in recent months. Second half posted lower growth. There's a base effect, consumption effect, but the habit of shopping seems to be very similar. Unlike other types of retail, we have identified opportunities for fashion products, products with an added value that are selling well with good margins. Now, obviously, purchasing power is under pressure, or else the growth would have been a lot higher. And I think that the easing of the interest rates, the easing cycle of the interest rates might help with that. But I would say that we expect, or we saw some stability in the past few months. And as for performance of cities in smaller cities, I'm not going to talk about street or non-street shops, but streets in mid-sized cities, as Daniel mentioned, they're performing really well. We are performing as expected or slightly above our plans. And as we mentioned in the Investor Day, above similar cohorts of the past, where we have stores and shopping malls and bigger stores. And this is due to lower costs and lower costs, as Daniel mentioned, and lower cannibalization because we're opening stores in virgin cities. So there's a faster acceleration. And there's improvement online. So it's bringing 10% more sales online in those cities. Or else the brick and mortar stores would be selling even more. So we're happy with their performance. They are performing better than past average, according to plan or slightly above on average, and with opportunities for improvement. Because all the improvement we have seen in fulfillment helps us understand the type of consumer, type of shopper in that city, and that improves fulfillment and assertiveness. In smaller stores, this can be even more important. So we're happy with the evolution of our model, and this is the best timing to accelerate our store opening expansion. We're accelerating to open 50 to 60 stores in total of the brands. For Renner, 22 to 30, Youcom 23 to 25, and about 5 Camicado stores. And our expectation, and we'll speak about this in a year's time, okay? But our expectation is that perhaps in 2027 we'll open even more stores. And just to speak about shopping mall and street stores, in the different cities, we have to analyze the potential of the city, qualify demand, and then we'll look for the best location. It might be in a shopping mall. It might be a street store. So there is no rule written in stone. It will depend. It will vary city by city. In larger and bigger cities, we are normally present in shopping malls. Okay?
Thank you both.
Thank you, Andrew.
Obrigado, Andrew.
Thank you, Andrew.
Com isso, encerramos aqui
With this, we are ending our Q&A session. Additional questions that were not answered can be sent to our IR team. I'll give the floor back to Fabio for his final statements. Well, our conclusion regarding 2025 full year is that we are ready for the 2026-2030 cycle. We know what works. We also know where we have room for improvement. We are confident in our strategy and the quality of our team. We are focused on delighting our customers and creating consistent and sustainable value to our shareholders and other stakeholders. Thank you very much for joining us today. Thank you. Have a great day.